In money matters, the JSE All Share Index traded slightly lower following sharp gains the day before, driven by dovish comments from the Federal Reserve officials and stimulus hopes in China. Meanwhile, investors shifted their attention to minutes from the September FOMC meeting due later in the day, while keeping an eye on headlines surrounding the Israel-Hamas conflict. Viv Govender is the portfolio manager at Rand Swiss, and he joins us now for the latest market moves. Viv, thank you very much for your time this afternoon. So the Rand continues to firm against the US dollar. It's much appreciated, but what's driving the rally?
As you mentioned, and dovish comments from the US Federal Reserve means that interest rates may not be rising as sharply as people have been fearing. And that means, or maybe coming down, sooner than people have been fearing as well. Those are generally positive for emerging market currencies, including the Rand. And I think that's one thing speaking there. And also the fact, like you said, that there is some hope for China's economy as well. Again, we export a lot of stuff to China, and that's going to help our export sector as well.
Oil edged higher as investors grappled with the prospect of supply disruptions due to the Middle East turmoil. What does that mean?
Well, yeah, look, right now it's all about tensions as opposed to actual change in supply and demand. You have to understand that, that's obviously a part of the world oil goes through. The key point to look at is what's called the Straits of Hormuz. It's just next to Oman and Iran. Around about a third of the world's natural gas and about a fifth of the world's oil travels through that region. And it's obviously in great danger if there is a conflict between, like, for instance, Israel and Iran, or the US and Iran. Very easy to stop the oil tankers from going anywhere because they're just basically big, balloons effectively of oil, which is flammable. Small, like weaponry can destroy them quite easily. Like a rocket launcher, someone can destroy a big tanker very easily. So yeah, it's that is the fear. But right now there has not been any change in supply and demand. It's just rising tensions that are driving things at the moment.
Focus turns to the release of mining and manufacturing figures by Stats SA on Thursday. Your expectation?
Yeah, look, we've seen a bit of depression coming through in some commodity prices. Gold prices have come down, platinum group metal prices have come down. We've seen disruptions with regards to electricity, but much better than it was like a few months ago. So I do expect production to be reasonably okay, but maybe some of the pricing that we have seen may make the miners not look as good, but the production I think should be reasonably good.
Metals processing company Jubilee Metals reported a decline in annual profit despite improving its output and total revenue. As lower PGM prices dwindled, help us make sense of the numbers.
Yeah, platinum prices have come down quite dramatically. If you look at the platinum prices right now, it's significantly, below 1,000, to $1,000 per ounce here. At one point in time, when we first started having load shedding and stuff way back in the day, we saw platinum prices, about $2,000 an ounce here. This kind of pullback, I think, means that, the market's kind of adjusting to the idea that platinum may not be quite as demand in the future as it is right now. Most of the platinum in the world, most platinum metal in the world, revenue comes from, catalytic converters, which are used for internal combustion engines. You move to EVs, that kind of goes away. Also, it's very easy to recycle platinum. More than half the platinum catalytic converter can be recycled. So even if you build new cars, if you recycle the old cars, you can get a lot of the need for platinum for the new car from the old car. So yeah, this is an industry that is facing some serious structural issues into the future.
Time Bank has raked up more than 8 million customers since its launch in February of 2019. What should this tell us?
The banking sector has been due for disruption for quite some time. We really haven't seen it happen right now. Time Bank, because of a number of factors, has meant that it's a really good structural thing. We've seen the discovery come out and that kind of stuff as well. I think that in terms of the banking sector in Africa, for the longest time we've been basically dominated by 5 big banks. Our fees are much higher than most parts of the world. You go to other parts of the world, the US, the UK, the fee structure is much, much cheaper than ours. And the reason that we've actually got to that point here is because of the fact that, of the dominance of the 5 big banks. It's not all negative. When we had the financial crisis, we were one of the most stable parts of the world because our banks wanted to do crazy things to make money because they were living off their fees. So yeah, with regards to Time Bank, I do think that it does show that this country is ripe for disruption in the sector, just because of the amount of costs that consumers face when dealing with their banks, which is not the norm in the world. by the way.
Sure. So when you speak on the dominance, especially when it comes to the high fees that we pay with the banks that we have in South Africa, and you say this is not the standard in the world, what then should we understand about that, more so in a country that is said to be the most unequal, where unemployment is so high and where interest rates right now are so high, and it would appear, or some have pointed out, that it is the banks that are benefiting from this?
Yeah, look, I mean, the five big banks in South Africa have, and with a couple of new additions that follow a traditional model, bank branches, ATMs, that kind of stuff, which is obviously, useful. But once you go to more of a digital thing, that advantage disappears. It doesn't matter how many branches you have. There's a digital bank out there. Most of the banking that we do nowadays is digital. Unless you have a use for cash, in which case you can actually draw money from the supermarket. You don't have to go to an ATM or a bank branch to do that anymore. You can go to the supermarket and get your cash. You really don't need to deal with much in terms of your normal day-to-day banking. I think you might go to the bank for your home loan or that kind of thing, maybe. But even that can be handled electronically. So that is, just shows how the technological structure of the industry is changing. But yeah, if anyone that's dealt with banking internationally, is opening a bank account in, for instance, the UK or something, wouldn't know that, South African bank fees are substantially higher. You get so many more benefits. It's much easier to transact. Things like ATM fees in many parts of the world are just like non-existent almost. Things like monthly bank charges are basically nothing. And you are looking in South Africa and you're finding that you're paying several hundred rands a month for, for instance, having that account, which is, like I said, not the norm.
Is dominance and is it anti-competitive or anti-competitive? Are they the same thing?
Yeah, that's certainly the case. There's lack of competition that's partly helping it. But like I said, it comes with benefits as well. I mean, the reason that we basically went to 2008 as nice is there was no chance that a Standard Bank or an ABSA or an FNB was going bankrupt. Whereas in the US, you had like the major banks, their biggest banks falling dramatically. Some of the biggest banks went, right to the edge in terms of viability. The same thing happened in the UK. I mean, they had the biggest banks, in real trouble. In fact, the government had to step in and save some of these banks here. That wasn't the case in South Africa, and that's primarily because they don't have to do the kind of things that banks elsewhere in the world have to do to make money. Because to a large extent, they can just live off their fees. They obviously just don't live off their fees, but that kind of buffer means that they're not as close to the edge in terms of some of the risks that global banks take. So there's a balance of this here. So in one case there is higher fees, in the other case there is a stability that comes along with having a small number of very stable banks.
Viv, there is also a notion that is, not bandied about, but heard this earlier on with Petri Redelinghuys in the week, where he was speaking of disinvestment in South Africa. To your understanding, what is that? What's going on?
Well, look, I mean, unfortunately, for the last, almost 20 years, certainly to the mid-2000s, you basically had a situation where if you bet against South Africa, take your money out of South Africa, and invested in the US, for instance, you would have done much better than in South Africa. Not just the Rand, its performance in terms of markets, its performance in terms of property. The economy in South Africa has had a real, bad, almost 2 decades period right now. Really underperforming what you could have done elsewhere in the world. And so that's translated into people basically looking elsewhere. Investors want to make a return. The return in South Africa is not seen to be as good, especially in dollar terms, as you'd find elsewhere in the world, especially in the US, which has been a rock star for the last couple of decades. I mean, the difference is quite dramatic. And what is it translated to is that people realize this pattern and are adjusting to it. So people are not starting new businesses in Africa. They're not, investing money in here. They're taking the money out of the country. They're looking at other options elsewhere in the world. So the same thing is happening with companies as well. A lot of companies are opening new, ventures in Australia and in the UK and the US and even places like Nigeria, which have not obviously, we've had some big failures. There are also some reasonable successes like MTN. So yeah, I think it's a case where people are just learning the pattern. It's been a long time where South Africa has underperformed.
Sure. Is that something to worry about, especially because of the high unemployment rate? But just last week, going to the doctor, couldn't prescribe certain medication because he says, they don't make it in South Africa anymore. That company has since pulled out. They've disinvested in the country. So just when do we start worrying? At which point? Because you go to the chemist and you don't find the medicines that you usually find. And also, could that also be an opportunity, right? We hear a lot industrialization or reindustrialize and making homegrown solutions or African problems or African solutions to African problems. So a two-pronged question. When should we worry and when should we see an opportunity, and can we do something about it?
We should have started worrying about a decade ago, quite frankly. I mean, what's been happening for the last several years, it's quite dramatic. The problem with this country is this is the key problem. I don't think anyone talks about it in these terms, but it's quite simple. For 100 children that start grade 1 in South Africa, about 40 of them finish with a matric in the right time, 12 years later. That is not a sustainable method. You can't have 100 children starting in grade 1 and then 40 of those children basically carrying a matric in 12 years later. That is a ridiculous statistic. What happens to the other 60 kids? And you do that year after year after year. What are you doing? You're building up this huge, almost like reserve of unused, untapped talent. And that makes instability in any country in the world. You can't have a youth unemployment rate above 50% like we have in South Africa. And that is the main reason that we really have a problem in South Africa. And the ways you really get around it is, historically, people talk about the system in South Africa, but with university or whatever, you can't have everybody getting a university degree. Even in the US, around about a third of the people get a university degree. Less than 40% of people get a university degree. The majority of people don't have a university degree, but there is jobs in the economy. What do you do instead of university? You do manufacturing, you do trades, you do other things, and those are not like second prize jobs. Those are the jobs that most economists should be depending on. We need to have a strong manufacturing sector in South Africa. We need to have a strong sector that's basically able to absorb people without a matric, because that's what we need in this country. It's not a place that's going to absorb people with university degrees or whatever. If you do that there, you're not going to solve the problem of unemployment in South Africa, because in no country in the world are you going to have 70-80% of people going to get a university degree. It doesn't happen anywhere. You need to have a place where people without a university degree can go and get a job that basically is good enough to basically allow them to buy a house, allow them to live a life, allow them to those things. And that is the problem in South Africa. We just don't have that structural thing in place to that here. So I think that's the number one issue. With regards to the medicine stuff, I think probably you're dealing with diabetes medication. That is another story that's quite interesting. There's a thing called Ozempic and something called Wegovy also being created, and these are in incredible demand in the world. Like literally, the company that makes it is in Denmark. Ozempic, it's Novartis, and they basically, I believe it's Novartis, but they're from Denmark, and they're making so much money at the moment that they're actually increasing the value of their currency to such an extent the central bank had to step in to basically weaken the currency. And we just can't compete, because in the US, I think the yearly prescription for this thing is like $15,000. That's almost 300,000 rands per year for the prescription for one medication. So in that scenario, obviously we don't get access to it. Should we do something about that? Yes. I mean, we should probably follow the Indian model, where they basically ignore any medical patents. India just says, we need it, we make it. Because we can't afford to have our people dying just because of some piece of paper from some other part of the world. And we need to do something similar to that. We need to basically follow the Indian model of producing what we need. We have the ability to do that. We have the companies that can do that and produce what we need genetically, and say, oh yeah, we'll pay if we can, but if we can't, we just produce it anyway. And that's, I think, should be the model we use in South Africa around that medication. India does it, and it does it quite well.
Right. Viv, just finally for us, you talked about, I guess, living conditions of people a little bit earlier on, and you touched on the socio-economic conditions. So according to statistics South Africa, the census that they released yesterday, the median age by population goes as follows: Black African 27, Colored 30, Indian Asian 37, white 45. And so when you take a look at the unemployment rate, and you take a look at what has been termed the inequality in South Africa, because there's also another notion, and reports are also suggesting, or research is suggesting, that those who can are preparing to leave South Africa, whether it's through their children in high school, so that you're preparing them for export. And those who cannot will then be staying in such conditions. What is the danger of that in the long term, especially when you take a look at the trajectory of the rest of the countries on the continent?
Yeah, look, I mean, this is kind of the demographics of much of the continent in terms of a large number of people in their early 20s. I mean, it was the average, the pyramid in terms of age is quite, dramatically different in Africa than it is in any part of the world, especially in places like Europe. This is the stat. I don't know if you know this, but by 2034, 2035, that's like in 12 years' time, for every one net worker added to the rest of the world, so every one new worker added to the rest of the world, everywhere in the world, there'll be 2 added in Africa, sub-Saharan Africa. That's the differential. So we talk about Asia, China, India, the US, the UK, everywhere else in the world, 1 worker, 2 added in Africa because of this demographic dividend. But here's the problem with that, is that you do that when you have, a manufacturing sector, like for instance China has. You become the world's manufacturer, you become the world's, factory, and you basically become very, very wealthy. You do that when you don't have work, when, automation is going to be taking over, like it is looking like right now. To bring in something, look, this is something I'm doing personally, and, don't promote my own kind of, my own kind of business here, but I'm just telling you, something I'm looking at. With AI, with automation, I think what's going to be happening in the world over the next decade or 2 is going to be a real drop-off in terms of demand for the lower rungs of the economic ladder. So China, Japan, all these countries, the way they progressed was they started making simple stuff and then made more complicated stuff over time, right? So China made garbage stuff and then eventually made iPhones. Japan made, cheap stuff and then eventually made Toyotas and made, that kind of stuff.